Luana Lewis, Senior Vice President of Programs and Services, and joining me today is Heather Leyland, who is Director of our Charity Accountability Program. We're representing the Metro New York BBB Foundation, which has as its core program Charity Accountability, including preparing Charity Accountability reports, which is what we're talking about today. We also do educational programs outside of this and programs for businesses and consumers on things like ethical business practices and consumer protection. Across the entire Better Business Bureau system, there are over 100 BBBs. There are 58 programs in the system that report on charities. Together, with our combined efforts, we publish about 11,000 charity reports on locally soliciting charities here in our region, as well as national and internationally soliciting charities. Those reports are prepared by the BBB Wise Giving Alliance, which does about 1,400 such reports a year. And here in Metro New York, at the current time, we have 774 reports on charities soliciting in the Metro New York area. Often we're asked why the Better Business Bureau does reporting on charity practices and why we evaluate what their practices are. And this is because we've often been asked by businesses and consumers who receive solicitations whether a charity is legitimate. People were coming to us as early as the 1920s for information about charities and charity solicitation. So over the years, this has grown into a pretty substantial program. Our current standards came about when at the national level what's now known as the BBB Wise Giving Alliance merged with another entity doing charity reporting, and they merged their standards as well, created some new ones, and formed the BBB Wise Giving Alliance. That's the entity that sets the standards for the entire Better Business Bureau system. The standards came into being around 2003 and were rolled out fully by 2006, so they've really been in the marketplace about 10 years. Here's what they cover, and they really have to do with key practices that charities are using that show accountability. They fall into a number of buckets. The buckets are issues like governance and oversight, really critical for charity accountability, finances, how you manage them, how you report them, whether your organization measures your effectiveness against your mission, what your mission progress is, and whether you report on that to your board as a matter of policy every 2 years. And then finally, how you do your fundraising and your communications. We have a lot of standards in that area. Going beyond the standards, the committee that originally created them, and it was a blue ribbon committee made up of experts from charities, academia, attorneys, and others, recommended practices including using diversity and pluralism in your efforts and your operations, for sure adhering to the law, and more than just adhering to legal practices, legal requirements, and standards, because there are standards from many organizations, prioritizing openness and ethical behavior as a way of operating that's fundamental to being an accountable charity. That's what it means in our view. So a few other things to just say about our standards. It's often misunderstood. People say that we have charity ratings, but we don't. What we do is we monitor using information that a charity voluntarily provides to see whether a charity is following each of the 20 key practices that are represented in the 20 BBB standards for charity accountability. And then our reports, which we publish, reflect whether or not a charity is or is not, in our opinion, following these practices. There's a real focus on accuracy of reporting financial information and solicitations, and that's because we come to the whole issue of charity reporting because of solicitations. A lot of the BBB pedigree has to do with encouraging integrity and transparency in relationships between businesses and consumers, and in the charity world that translates into donors and charities. Our standards and our practices focus on particularly the generally accepted accounting principles, or Gaap, and that's because they offer the greatest consistency. Form 990 isn't always very consistently reported by charities. And for that reason, you may know, for example, the body that sets those standards, the Financial Accounting Standards Board, or FASB, has recently been reviewing its Gaap principles for charities, for nonprofits, and may soon issue new guidelines that would be very significant. So that's something you'll want to watch in the future. This is why we are preferring the Gaap compliant financial statement. That would be an audited financial statement in most circumstances, but in some cases it might be a prepared financial statement following Gaap principles. And then behind everything is the notion that accountability is more than just financials. We'll talk about the overhead myth a little bit down the line, but often when you'll see newspaper reports and other kinds of statements by, say, politicians talking about charities, they focus only on financial issues, which we think distorts the true picture with charities and misrepresent what accountability truly is. We do feel that the standards give a really great picture of accountability in a charity, and so we commend them to you as a good path to follow and not just a check-the-box kind of thing to do in order to show people that you are accountable, but it is handy that way as well. So the benefit to donors is that there's a quick way through a BBB report to check and see if a charity is meeting high standards. And in the current environment where there's so much going on, a lot of questions about whether charities are accountable, questions about the whole field. It's beneficial to be able to show easily and quickly that you stand out as a charity using good practices. We have, for those charities that use all 20 of the practices and meet our standards, you can go through that process for free, by the way. There's a BBB charity seal. It's the accredited charity seal. It's only available to charities using all of the standards that become accredited. It's optional. It's not mandatory. It's an opt-in program. We'll talk more about it at the end of this webinar, but is widely recognized as a valued charity trust mark, and we have some evidence for that we'll talk about in a sec. For charities, it's the standards we see as helpful in themselves. It's a great checklist to look at, to audit and see how am I doing. And organizations that go through the process do tell us that they find it very helpful in understanding how they can tighten their practices and be more accountable and effective. So again, it's a fundraising tool as well, but the seal, that is, that's only for BBB accredited charities that opt into the program. So here is one study that we've done in the past. Actually, it was a series of studies that we commissioned with Professor Greg Chen at the Baruch College School of Public Affairs. We looked with the first wave of data at just Metro New York BBB charity data from our reports. And the second wave of data in a second study, we included both Metro New York and BBB Giving Alliance data from larger nationally or internationally focused charities. And we consistently found that there was a positive association between meeting all 20 of the BBB standards and higher fundraising results. In the most recent study, which you can read online, and you will get these slides after our webinar today, it was shown that something like 13.5% increase in fundraising revenue was associated with Metro New York charities that we evaluated here, which are soliciting in our region. And for national organizations, most of them considerably larger, there was still an 8% increase in fundraising revenue shown on average for those organizations that were meeting all standards upon review by the Wise Giving Alliance. So we felt that this was very significant. Also, just serendipitously, completely outside of our auspices, an organization named Able Altruist a few years back conducted a huge survey of donors. According to them, it was 3,861 respondents, and they found a number of significant things, including that 55% of their survey respondents said they look for seals on charity websites, and a similar number, 52%, said the presence of a seal, some kind of accreditation seal, greatly or moderately increased their likelihood of giving. And of all the seals tested in this study, the BBB accredited charity seal was ranked the one most likely to influence the donor's decision to give. More recently, the Better Business Bureau, in the context of a larger study about the Better Business Bureau itself, did a Nielsen research project and found with their survey respondents that in the U.S., 50% of the respondents said they were more likely to donate if a charity displays the BBB accredited charity seal on an appeal. So this is a very new finding and one we feel great about and just commend to you as something that maybe could be helpful to you in the future and a reason why you might like to go through the charity report process with BBB. We report these through our website. This is our Metro New York page, which we hope to update soon at ny.give.org. You can see we have a bunch of information there for both charities and donors on the website. And let's talk about our process. So Heather, I'm going to turn it over to you now to do that.
Great, thank you, Luana. So the Better Business Bureau of Metro New York seeks to review organizations that are at least 3 years old. And the reason for this is because it oftentimes takes a little while for charities to get up to speed and put processes in place and recruit board members. So typically 3 years is a good benchmark for that. However, we would provide a report to a charity on request, even if they were not 3 years old. We would just strongly recommend that they get familiar with the 20 standards before they apply. Organizations that are soliciting publicly for donations, we would ask them to apply as well. Charities with $250,000 or more in revenue in donations, we're seeking to review those charities. Also, if your organization is in the news for any reason or of interest to the public, that would also be on our radar, and we would ask you to go through the review process so that we can develop a report that the public can refer to. So any eligible organization that requests a BBB charity report, we would be happy to provide that for you. The process is completely free. So the charity reporting process is pretty straightforward. You would provide information to us either online or by mail. That information would include items such as your financial statements, your privacy policy, annual report, conflict of interest policy, and samples of your fundraising solicitations and other items. We use all of this information to evaluate your organization against the 20 standards for charity accountability. And once we do that, we send you a draft of the report to review to let us know if it's factually accurate and answer any questions you may have about our findings. And even before we get to that draft report, we will contact you with questions if there's anything that's incomplete in your submission. So we do have a dialogue and a relationship with you before we get to any publishing on our website. Then after 2 weeks that you've had to review this draft, we will publish it then on our website after we've spoken with you and gave you the opportunity to review our findings. We will always send you that final report, and once it's on our website, it is good for 2 years. After those 2 years, you would need to reapply and renew your report. Next slide. So I'm going to jump into our governance standards, and the first 5 standards encompass this portion of our BBB standards. The governance section of the standards seeks to ensure that the board provides adequate oversight. Oversight by the board includes all of the items on this slide. The board would need to approve the budget and any major fundraising practices or contracts and major expenses. The board should also receive copies of your 990 and fundraising contracts. Accounting procedures have to meet generally accepted accounting principles, so this would apply to your audit. And regularly scheduled appraisals of the CEO's performance should be done at least once every 2 years. Voting members of the board should be overseeing the organization's finances. We don't give legal advice, but in general, a conflict of interest policy is typically required of all charities, and there are new procedures to follow and legal requirements about what elements must be in a conflict of interest policy. So we recommend that you review the New York State Nonprofit Revitalization Act to review the mandates and procedures that your organization should be following. And we will provide a link to that at the end of the PowerPoint. Next slide. So our standard 2 requires a minimum of 5 voting board members. Standard 3 calls for a minimum of 3 evenly spaced meetings per year of the full governing body with a majority in attendance. If more than 3 meetings take place throughout the year, we will look at the 3 meetings with the best attendance to determine whether there were at least 50% members in attendance. Executive committee meetings or any other type of committee meeting does not count. It's only full board meetings. And a conference call can substitute for one of those in-person meetings. In addition, a video call, such as by webcam, Google Hangouts, or other means where everyone can both see and hear each other, may be counted as a face-to-face meeting. Our standard 4 calls for not more than 1 or 10%, whichever is greater, directly or indirectly compensated persons serving as members of the board. When we say directly compensated, we're referring to anyone that might receive compensation in any form, such as cash payments or in kind, and it might include something such as benefits like health insurance, for example. Indirectly compensated is referring to voting members of the board who are direct family members or directly compensated individuals, including both board and staff. And it's really important to note that the chair must not also be performing the role of CEO or COO of the organization, regardless of whether they're compensated. And also, if they don't have the title of CEO or COO, so long as they're still performing that role, even without the title, then they cannot be the chair of the organization. The board chair may not also perform the treasurer role. These have to be 2 distinct roles and 2 distinct people. Compensated or uncompensated senior executives may not serve as chair of the same organization if they supervise staff and perform the functions that a CEO typically would. Those 2 roles cannot be combined. If a paid CEO serves as the chair of an organization, they could potentially not meet 2 of our BBB standards for that same reason. They would not meet standard 1 because their chair and CEO is the same person, and they would not meet standard 4 because the chair is directly compensated as a paid CEO. This may be changing soon. We suggest that charities monitor this very closely and see the Charities Bureau for information, because our prior understanding was that effective January 1st of 2017, the New York Nonprofit Revitalization Act may require that the board chair cannot be the CEO, executive director, or any employee of the nonprofit. So please refer to the Charities Bureau if you have any questions about this or need clarification, and we will have a slide for you to refer to that at the end of this PowerPoint.
Just adding to that, our understanding is that the law in that area may change, so you definitely need to keep on top of that with the Charities Bureau.
So our standard of 5 is in regards to conflict of interest. Charities should always seek competitive bids and exclude related parties from voting. It's recommended that boards take an active role in determining whether a related party transaction is fair, reasonable, and in the best interest of the organization. New York State law has very specific requirements touching on conflict of interest, policy requirements, related party transaction procedures to follow, and board member independence. All charities should review these requirements to come into compliance with them. These requirements may be changing soon, so again, you should monitor these with the Charities Bureau. There's also a disclosure question on your IRS full-length 990 as well, so it's increasingly important to avoid anything that might look like a reportable conflict of interest that you have to explain on your public tax return. Generally, if the charity conducted substantial transactions with a board member or a staff-related firm and didn't take any steps to ensure arm's length, then they wouldn't pass the standard. And now I'll turn it over to Luana to go over our measuring effectiveness standards.
Yes, standards 6 and 7 both have to do with your organization committing itself to evaluating your performance against your mission and then reporting on that as a matter of board policy in a written document to your board at least once every 2 years. Standard 6 requires that you have a board policy of doing this kind of assessment. It's often missed and it's often misunderstood, and it's really one of the simplest things to meet, because chances are good you're already doing a version of this, and it wouldn't be difficult for you to comply. But the thing that we're looking for with this standard is that your board set a formal policy that your organization commits to following of assessing how you're doing against your mission. The policy itself should have identifiable and measurable goals and objectives, and you should have a process to evaluate the success or impact of your program to fulfill the mission. But we don't judge the process or the results, and we don't actually need to see the report that you make to your board. What we're looking for is evidence that you are, in fact, checking how you're doing against your mission and making adjustments along the path at least once every 2 years. Standard 7 calls for your board to approve a written report that outlines the results of your assessment. And just something to know, if your strategic planning process already looks at what your performance is against your mission goals and makes recommendations for future actions, then that would, in fact, fulfill the requirement if your board reviews your strategic plan and approves it on at least once every 2 years basis. As a tool to help organizations prepare this kind of evaluation, some years ago, the BBB Wise Giving Alliance collaborated with GuideStar and with independent sector to create something called Charting Impact. It resides now online at the website you see here on the screen. And this is just a very simple tool asking 5 questions like, what are you trying to do? What's your mission? What are you aiming to accomplish? What are your strategies for making that happen? What are your capabilities for doing it? How do you know if you're making progress? And what have you and have you not done so far? If you complete this tool and then take the resulting report, which the tool can generate for you and your board approves it, that in fact is sufficient to satisfy our standard 7. So just to know, it's out there. The tool, before we created it, was tested with both large and small organizations, and the feedback we got about it was that these 5 questions, which were designed for nonprofits of all sizes and types, are really very helpful in spurring fresh thinking about how to move forward in new ways, more impactful ways to achieve the mission. And now back to Heather to talk about our financial standards.
Thanks, Luana. So standards 8, 9, and 10 are the only financial standards that set our target spending ratios, and these ratios were determined by a national panel of experts less than 10 years ago. But before I jump into the ratios, I'd like to quickly recap on the overhead myth. Many of you may be very familiar with that, but for those who aren't, in 2013, the BBB joined forces with GuideStar and Charity Navigator to launch the Overhead Myth campaign at overheadmyth.com. In an open letter to the Donors of America, we declared that the overhead ratio is not a viable indicator of nonprofit performance. It's not a score and shouldn't be used like one, and we asked donors to consider the whole picture. And then in 2014, we issued a letter to the Nonprofits of America asking them to be transparent and honest about the true cost of fulfilling their missions, because it's important to educate funders on the real cost of results. By itself, the overhead myth is not a good indicator of a nonprofit's performance. You know, donors need to look at other items to determine whether a charity is healthy, and that is they should be looking at transparency, governance, leadership, and results, because other factors matter. But even so, charities need to keep overhead spending at a reasonable level and, you know, be transparent about it. So that's to say that we do feel that our ratios are appropriate and reasonable. And, you know, it's really important because while these numbers, you should review your monitor your expense ratios, because how you look to others is important. About 90% of Metro New York evaluated charities do meet these ratios, and only about 11% or fewer don't. And while these numbers don't tell the whole story, there's still increasing interest from media, government, and donors. So our financial standard 8 says that your program expenses should be at least 65%. And relatively few charities can't meet this 65% mark, and the way we get this number is we take your total program expenses and we divide it by your overall total expenses. There is some misunderstanding about what's considered a program expense, and some think it's the standard forbids allocating any overhead costs to programs, which is not correct. We consider it legitimate to include allocations such as salaries, rent, or things of that nature to a program so long as you can document it and substantiate it, and the proportion attributable to the program is reasonable and appropriate. Please see our implementation guide online. It provides other examples of this and fleshes this out in more detail. Other expenses belong elsewhere. So for example, staff time or resources used for fundraising should be under fundraising. And general management, bookkeeping, or equipment maintenance should be under administration. So it's just important that you parse these expenses out properly. We don't offer strict guidelines about what those allocations should be. We simply ask that you do it in a reasonable and transparent way that can be substantiated. Our Standard 9 calls for 35% or less of related contributions be spent on fundraising. When we say related contributions, we're referring to revenue generated by your fundraising efforts. So we calculate this amount by taking your total fundraising expense and we divide that by those total related contributions. The result should be no more than 35 cents spent on each dollar that you raised. Related contributions refer to any type of support that can be generated through fundraising activity, which includes all the activities on this slide. But I'd like to point out a few specifics. Membership dues may be considered donations if member benefits are very minimal or non-existent. So that's something to be aware of. In regards to special events revenue, amounts that are attributable to direct donor benefits, such as meals or entertainment for events, are not considered fundraising expenses. I've often seen charities misunderstand this expense, and of course that would skew your expense ratio, so that's something to be aware of. Other expenses, such as printing, promotion, or design related to fundraising, if it's related to those efforts and connected, then the events, they are considered fundraising expenses. We will ask you to disclose in Breakout event gross revenue, fundraising costs, and donor benefit costs excluded from fundraising expenses if this is not clear in your financials. So oftentimes you might record the net revenue from a fundraising expense, but so long as you have that expense in the audit and it's clear to donors, then that would be okay. If your organization receives both government grants and contracts, we would ask you to parse that out in your statements as well. And the last thing to note on this is that for sales revenue, if an item is sold expressly for a stated fundraising purpose, the revenue from that sale of some of the items might be considered contributions. However, if a fundraising goal is not specifically stated in connection with the sale of the item, then it's not a contribution. So just be sure that you calculate your contributions and fundraising expenses correctly. When you're valuing your in-kind donations, you want to make sure that all the in-kind support is being properly valued. And a good rule of thumb for this, that if it's a service you typically would have had to pay for, such as something done by a professional with a specialized skill, then there would need to be some valuation associated with that and recorded in your audited financial statements. And you can review to this document noted in the third bullet here, the Financial Standards Accounting 157. It's got all kinds of examples in there that are really relatable to a lot of situations with nonprofits, so I highly recommend that you review that. Because again, okay, so accumulation of funds. Standard 10, we're looking at your unrestricted net assets, and when we're looking at this number, we're not including things such as your land and buildings, fixed assets of that nature, or donor restricted funds. What we're looking for is that your unrestricted net assets available for use are not more than 3 times your last year's expenses or 3 times the current year's budget. However, there are some situations where a charity is fortunate enough to have a large reserve of unrestricted net assets. And if this is the case, you can meet this standard by disclosing this in your fundraising appeals. So long as you have like a standard, a statement about the fact that you have, X amount of dollars, which is 4 times our last year's expenses, and that's on the point of solicitation, then you could still pass the standard. It's the charity's discretion on how to make that statement, so long as it's clear and conveys factual information.
The point of confusion about this too is the difference between unrestricted net assets and board-restricted net assets. And assets that are restricted by the board are not restricted for accounting purposes or for purposes of this standard. Just to know.
Great. Right. The reason this is so important is because donors do expect that their contributions are spent on programs, and that's been confirmed by survey research. So just, in the interest of transparency, we ask that you be very clear about this in all of your solicitations. Our Standard 11 calls for the availability of your financial audits prepared in accordance with Gaap principles. This applies to charities that have over $500,000 in income per year. If you're between $250,000 and $500,000, a CPA review is sufficient, and anything under $250,000 annually, an internally prepared statement. For our purposes, when doing your report, we require a copy of the statement, and for the public, so long as they request it, it would have to be available. We do check the auditor's cover letter, so we're looking at their opinion, and we do read that. So we would ask for the management letter and the audit together. Our Standard 12 is calling for your financial statements to include expenses broken out for programs, fundraising, and administration. So if your organization has multiple programs, you would need to have the expenses broken out for each individual program. And right now, that's actually required of health and human service organizations, and it's possible that in the future that may be a requirement of all organizations, and it is already part of Gaap principles for accounting. So this is an example of what a functional expense breakout could look like. You want to be sure that your charity is not underreporting your program expenses or over-reporting them. You want your financials to be representative of your accurate expenses, because this is a fundraising representation, so you want to be sure that it's accurate. And as you can see here in the column to the left, salaries, travel, and postage can be broken up by program, fundraising, and admin. So parse it out as you need to, but just make sure that it's as accurate as possible. Because those items that are often thought of as overhead may actually be program expenses if you can document and substantiate that that's the case. So just be prepared to show that any expenses allocated belong there. And this is really important. It's a critical management tool for staff and board. Halfway through the year or at certain benchmarks, you want to be able to see how you're doing. So it's really important to understand what you should be spending, what you have allocated, and what you actually spent. It does tell the important story to funders and stakeholders, and Gaap requires it. Again, they require it for health and human service organizations, and also your 990 includes it. So you already have to parse it out, so you may as well include it in your audits as well. Standard 13. We require that you accurately report your organization's expenses, including your joint allocations. So if you report 0 fundraising expenses, this virtually guarantees that this standard won't be met. There are very few organizations that do not have some kind of fundraising costs, even if it's relatively small. Examples of joint costs could be some organizations have direct mail appeals that also include activities related to programs. It's usually in the form of a public service message or something of that nature. This is fairly common, but charities with those type of joint allocations of expenses should be sure that they're appropriately and reasonably proportional, and they should try not to minimize fundraising costs by overinflating the amount attributed to programs. A good way to understand how to do that this document here on the bottom of this screen, the AICPA Statement of Position, is a wonderful reference if you're trying to understand how to do your joint cost allocation. But one of the key things to keep in mind is your intent, your audience, and the content. You know, when we're talking about audience, you want to look at, are you targeting prior donors, or are you sending this message to a newly identified population who can benefit from your program? So who is the target and what is your intent for that audience? And again, the content, is this a call to action, or is it a call for a donation, or a little bit of both? So you want to be really clear about that. Our standard 14 is the budget. The budget must be board approved, and it has to have the expense allocations, expense totals for program, fundraising, and administration, broken out just like it is in your audit. Now, this doesn't have to be as detailed as the audit. So for example, we have this budget here. This wouldn't pass our standards because while it has all these items broken out, it's not clear from looking at this what is allocated to programs, fundraising, or even admin. Any portion of these expenses could have a little bit allocated to programs and vice versa. So a type of budget that would be acceptable by the BBB is the one on the next slide. As you can see here, this is not broken out into minute detail. It has the totals, and that's what we're looking for. So in this example, this organization has 3 programs, and there are 3 expense totals. They have their fundraising and admin broken out as well. So long as you have that, and also the revenue, then that would be sufficient for our purposes. And it's highly recommended that your organization adopt this style of budgeting, because just like the audit, it's a critical management tool, and it's a good way to set the benchmarks for what you anticipate you're going to be spending per program. You know, you really want to know whether a program is meeting its goals or not, and the only way to do that analysis is if you have this document to refer to. So it's highly important that you do this. The Wallace Foundation and Fiscal Management Associates created a free library of resources and tools to help organizations become fiscally fit. You can find it here at strongnonprofits.org. It's a budget template, and you can plug in your programs and the totals and adjust the percentages, and it will format everything for you. It's a really wonderful tool. I've had a lot of charities use this, and I highly recommend it to anybody that needs some help readjusting their budget in this way. Over to you, Luana.
Yes. So now we'll talk about the set of standards that have a lot to do with the reasons why BBB does charity reporting. Solicitations are about the relationship between donors and charities, and they're critical. That relationship is essential for a charity to survive and thrive. So let's start with 15 about solicitations. And this is the overarching principle that really underpins everything we do with our charity reporting, and often informs charity regulator attention to what nonprofits are doing as well. It requires that all your solicitations and whatever communications materials you're using, however you distribute them, and we know that keeps changing with technology change, need to be accurate, truthful, and not misleading. That's the key part, both in whole or in part. Not misleading is especially essential. And just the one thing I would recommend is for folks who are directors of development, when developing your appeals, to be sure that you are in close communication with whoever on your staff is responsible for finances, your CFO or controller, and also whoever gives you legal advice, your general counsel, or whoever else can give you legal input, to make sure that whatever you say you can substantiate is true. And the mantra we like to put out there is, if you say it, be able to substantiate it. If you can't prove it, don't say it. And that's really a helpful rule of thumb in meeting this particular standard. So what we're looking for in particular, in both written and graphic representations, let's not forget that everything from font size to pictures conveys things, the way they're organized on the page. Those of you who do direct mail or online fundraising know this especially. Stories and photos need to be up to date and accurate. You don't want to have a success story that's 10 years old on your website or in a direct mail solicitation that's being represented as current. That would be considered misleading. Are the key facts that are relevant to the reason why people should donate disclosed fully? Not just cherry picking, but have you really laid it all out there so that the donor can make a good judgment and donate understanding how their money is going to be used? We know from research that this is what donors most care about. They're worried that their donations won't be used as they intend. So being really, really clear about how a donation will be used and disclosing that fully is important. We suggest not using overhead ratios in your fundraising appeals. Things like 100% of your donation will go to blah, 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 blah. If you say something like that, we're almost certainly going to ask you to substantiate it with documentation. And it's not uncommon for media, actually, to scrutinize such claims and ask for proof. And we had, a few years back, we had 60 Minutes come to us and ask us whether a charity that was using that kind of appeal rather prominently had in fact substantiated to us that it was so. We had asked them to prove it, and they did. They had documentation. But if you're using that kind of statement, you should also, immediately in conjunction with the statement, say why it's true. But we suggest not using it, and here's why. It just accentuates the already terrible stereotype prevalent with media and politicians and consumers that, you know, it's a misconception, the idea that nonprofits can exist without fundraising expenses or administrative expenses. Don't want to give that impression to people because it's perfectly legitimate and necessary for nonprofits to have those kinds of expenses so long as they're in reasonable proportion to mission expenses and program expenses. Are your claims about your program and your success accurate? Sometimes in our enthusiasm to portray a story, something can get exaggerated and not. You should always be asking when you look at your appeals whether every single claim in them can be substantiated with documentation if it's challenged. And that'll be protective for you. Can you show that your charity is going to do what it says it will do with the donation? These are all things donors care about very deeply. They affect your reputation. They inform regulatory action. So for your protection, for your donors' protection, and especially, you know, for clarity and transparency with your charity, this is the high standard that we hope you'll cleave to. So here's what we're recommending. Substantiate accuracy of all claims. Explain clearly how your funds are going to be used. Avoid the kind of claims that might, you know, prompt us to dig deeply and ask you to prove things. Other things that we sometimes see with new or emerging charities, there might not be enough specificity about what the charity does or how they're proposing to use funds. Sometimes there's inaccurate or not complete info on what the financial state of the charity is going to be and the charity soliciting. Of course, we all know that funds have to be used for the purposes for which we solicit them, but there are charities that also, because they get into financial straits, or they don't have good records, good documentation is essential in this area, may wind up using funds for purposes that they weren't solicited for, and that's a problem. So avoid all of these with really clear documentation and clear statements about how funds will be used. Standard 16 on the annual report is our most missed standard, which I find kind of perplexing because it is another one that's really pretty easy to meet. All we ask for, we're not asking for a fancy document. It doesn't even have to be called an annual report. It doesn't have to be something that was expensively printed. It can live on your website in a PDF. But it does need to include the information that donors would need to know in order to make some kind of informed decision about giving. Your mission, what is your organization's mission? A brief summary, doesn't have to be long, about what your prior year's program results were. A list of your officers and members of your board of directors, and then some brief summary of your financial information, and that would be the total income for the prior year and your total expenses for the prior year broken out functionally into program, admin, and fundraising categories, and your ending net assets. This is actually not a lot of information. It can be done on a single page, and we have examples we can show you. And actually, your 990 might count as one if it includes all of that information. A 990, of course, is not a terribly donor-friendly document. I have been a fundraiser in my past, and an annual report was a key fundraising tool. And it's a way of telling your story in a donor-friendly style and making your case for the donation. So we encourage you to do that, but it doesn't have to be fancy. Once again, it can be very, very simple, and these days, simple is good. A digital report, once again, is if it's online, that's fine as long as it can be printed out and sent to those who request it. Stuff that's scattered all over a website doesn't really count as this kind of annual report. We're looking under Standard 17 for the same kind of disclosures on your website. If you've posted your 990 there, we do look for you to do that actually. It can be an actual PDF or a link to the 990 that is appropriately labeled. We want to see also your mailing address so that we know where your organization can be located, and the information that we request in the annual report. This is sometimes missed as well, mystifying. This is just your way of legitimizing yourself to your potential donors. Hey, you know, we're a real organization, we have real results, we have a real address, here's where to find us and what we do, and we want your questions. So let's see that on your website. Along with that, on your website, we want to see a privacy policy addressing the privacy concerns of your donors. This would include, at minimum, what kind of information is being collected and how it was going to be used, how a potential site user, or actually this could be not just in your website, but how the donor or other consumer could contact your charity to review and correct any information you may have stored about them, how to tell you not to share their personal information, since people do care about that. We get more complaints about that. Tell that charity to stop soliciting me, tell that charity not to share my information, than almost anything else. And of course, increasingly important, what security measures are in place. If you don't yet have cyber security policies and procedures in place, this is something very important for you to look into. It's not part of our standard here, other than disclosing what security measures you're taking to protect data you collect about people. But charities are increasingly subject to cybersecurity problems. They can be severe enough to put a charity out of business. We do have information on our website about that. That is a webinar recording about cybersecurity for charities and other information as well that we can provide you. We're looking for an opt-out at least once a year. You need to allow people to opt out of being contacted by you, and that can take the form of a checkoff box. Really good practice is to do it more than once a year, to allow opt-out on any solicitation or communication so that donors can, this really is a trust issue. If they don't want to be contacted anymore, and let you know it, and it's good for you too, because you don't want to be either emailing or mailing to someone who doesn't want to hear from you. Just a few tools about cybersecurity and data security for your information, and again, we're going to send these slides to you. We have a Data Security Made Simpler program, and also BBB 5 Steps to Cybersecurity is at this web address that incorporates the NIST 5 steps that are recommended, very simple things that people can do at fairly low cost. And we are also doing programs from time to time on this issue. Plus, the Online Trust Alliance has information on data protection. So Standard 19, and I'm not going to go too deeply into this because it's usually just larger charities that get involved in cause-related marketing. But just briefly, the standard asks for the charity that is benefiting from the sale of a product or service to fully disclose through its cause marketing partner and any claims made about the cause marketing purchase, how that charity is going to benefit from a consumer sale or transaction. The state of New York does have regulations that apply to what are called commercial co-ventures, and some cause-related marketing programs might fall into that bucket. There's a lot of detailed information about the regulatory requirements on the Charities Bureau website at charitiesnys.com, and we will give that website at the end of this presentation. So in cause marketing, of course, you know, your cause marketing partner can't just use your name without your permission. So you do have the ability to control the relationship through a contractual agreement, your written agreement with that partner, and over what has to be disclosed. And we're looking for who, what, when, where, and how. The actual or anticipated portion of the purchase price that's going to benefit your organization, either a percentage or a flat amount, whatever that's going to be. If there is a time limit to the campaign, then those time parameters have to be disclosed. Whether there are any other limitations like a maximum or a guaranteed minimum. It's just like if you were going to make a purchase, you want all the terms and conditions of the sale to be fully disclosed up front if it's for commercial purposes. The same principle applies to a charitable benefit that's part of a call to purchase something, either a good or a service. All the terms and conditions that apply need to be fully disclosed at the point of purchase. So here's an example that would pass the standard because it has all of those elements. 5 cents will go to the ABC charity for every bottle of juice sold in September 2015 up to a maximum of $500,000. So you have the amount. It's a flat amount, 5 cents for every bottle of juice. That's per unit. Sold in September 2015. That's when, and the maximum we know is $500,000. Also, of course, you want the charity benefited to be a real charity. It's ideal if you name the charity. Just something else to keep in mind is proportionality. If you say we're contracting with a juice manufacturer for a cause marketing deal, you want to make sure that the number of bottles of juice that have a cause marketing claim on them is proportionate to the maximum. In other words, say you have 1,000 bottles of juice out there. If the maximum is hit when 100 bottles are sold, and then there are 900 bottles of juice out there with a cause marketing claim that can't be triggered because the maximum has already been hit, and that would be misleading. So we do know that regulators look at issues like that, and there are things to take into account. The Charities Bureau actually got very involved in a regulatory sweep around cause marketing. I think it had to do with cancer-related cause marketing promotions, and then at the time they did their sweep, this was a few years back, they published best practices, some of which go beyond our own standard here, but I'm just mentioning, again, clearly describing the promotion, making it easy for consumers to figure out how much is going to get to the charity as a result of their making a purchase. Being transparent about the claim, in other words, disclosing limitations to offers. The Bureau went on to say they wanted to see transparency in social media appeals and at the end tell the public how much is raised, which goes beyond our standard but is a great practice. Our final standard to mention, standard 20, we look for charities to respond promptly to complaints when they're brought to our attention by consumers. We do get occasionally complaints against charities, or the Wise Giving Alliance may. And as we do with businesses, we're seeking for charities to respond to us and to the consumer with a prompt and reasonable solution to whatever the problem is. So just to recap here, what the most missed standards are from last year. The effectiveness policy, one of the easiest to meet, and we have a model policy we can show you, which you don't have to copy, but it just gives you a sense of what it might look like for your board to review and pass. The annual report and website disclosures, obviously related because it's the same information disclosed in different venues. A board-approved budget, mysterious to me because how you can manage your organization without a board-approved budget, I can't understand that. It's an essential management tool. Effectiveness reporting, that's effectiveness against your mission. Often misunderstood. I think maybe misunderstandings are reasons why people miss that. Then board oversight and governance meetings. Problematic, very serious. We certainly want to see charities meeting those standards. They're incredibly important. The ratio standards and fundraising and program are around at the bottom here, but they are in there. And then we do sometimes see excessive board member compensation happening. Excessive meaning like too many of the board members are what we would consider compensated. And so an organization misses that standard. We invite you're contacting us to learn how to meet any of the 20 standards. And if you have questions about any of these top 10 missed ones, please do let us know. We're happy to help you know exactly how you can meet them all and why that might be good for you. Our standards are listed here at this website, and there is a detailed implementation guide, which is what all of the Better Business Bureaus across the U.S. and Canada follow in order to implement charity standard reporting. So it's uniform everywhere, and it is the authoritative guide to how to meet the standards. Likewise, charitiesnys.com is the Attorney General's Charities Bureau website for regulatory information and guidance. And there's more guidance here. We'll send this to you. This is about the New York State Nonprofit Revitalization Act, and Lawyers Alliance for New York has recently issued several memorandum which are very helpful about proposed or possibly impending changes to the Nonprofit Revitalization Act, so it's a good source of information. And Heather, back to you to discuss the Charity Seal. I think we have just a couple minutes left.
Great. So after you pass all 20 standards, you can optionally join our Sealholder program. If you'd like to license our federally registered trademark, the beautiful blue BBB torch, for your fundraising materials and your websites, you would need to sign a licensing agreement, and there's a small licensing fee associated with your fundraising revenues, and it can be as low as $50 a year depending on the size of your charity. So one of the benefits to our Sealholder program, not only do you get to use our BBB logo on all of your marketing materials, but we also do 4 ads per year. We do 2 ads in the New York Observer Philanthropy Edition and also in the Daily News. And this year we're going to try the Metro as well. So we do these ads. A couple of them are in the spring right around tax time, and the other 2 are in the fall in the giving season. So this ad, this is what it looks like, and it lists all of our seal holders with their websites so that donors can go directly to your websites. This is an example of what it might look like. Donors can click on this link and it will go directly to your BBB report on our website so that they can verify your full accreditation with the Better Business Bureau. And if you have any questions, we do encourage you to reach out. This is our contact information, and we look forward to working with you in the future.
Okay, I'm just looking to see if, I don't think any questions have come in. But let me see now. I do see one question. My nonprofit organization assists youth-serving nonprofits. We work with a network of nonprofits. If we were to require that they use this service, what is the fee for the BBB service? The process of going through the report is completely free. You can become a BBB accredited charity completely for free. There's no fee at all. You can call us anytime. The only thing for which there is a fee is the use, the licensing the use of our brand, our BBB accredited charity seal for fundraising purposes. I would say, like, of the charities that are currently accredited with us, about 60% of them license the seal. Is that correct, Heather? And then the others elect not to do that. So there's no requirement to it to do that. I'm trying to get to this next question here. I think that is the only question we have there, and we have come to the end of our time. We invite your further questions. We will send the slides around, and you can contact us through this email address, charity@newyork.bbb.org, or 212-358-2873, and it will be our pleasure to help you with more questions. Thank you so much for attending today. We greatly appreciate it and hope to communicate with you more in the future. Thanks again.